Good morning, everybody. Thank you, Penny, for the introduction. My name's Rebecca Beresford. I'm the Director of Net Zero Strategy and Policy for EDF in the UK. So some of you might have been at this webinar last year and seen Roy and I before, but for those of you who weren't, my team's responsible for leading EDF in the UK's activity across all energy policy and regulation topics, and also our corporate strategy and sustainability functions as well. So it's lovely to be here today. Penny, if we could move on to the next slide, just in terms of an agenda, we're going to cover a few different things as we did last year. We will start by quickly recapping where energy prices, but specifically electricity prices, have gone this year. So you might think it's been a slightly calmer year than last year. It's still quite high and quite volatile, but we'll take a look at that. Then we'll go on to look in 2023 about what the main policy evolutions activities have been, where in particular we've seen the regulators' attention be focused during 2023 on the range of topics that we think will be interesting for this audience. So this is not an exhaustive tour of everything that's happened in the world of the energy market and policy developments, but hopefully some relevant areas for all of you. And then we will attempt to get our crystal ball out and look ahead to 2024 and some of the things that we expect could be on the agenda in the world of energy policy in 2024, obviously mindful of the fact that there could also be a very likely to have a general election at some point in 2024. And then hopefully after that, we will have some time for answering your questions. So as Penny said, please do put your questions into the Q&A bar as we go along. I think probably we won't pick them up as we speak, but we will come back to them at the end unless we spot something that feels particularly sort of relevant to where we are in the conversation at that point in time. So hopefully that's okay with everybody. Penny, please could you skip on a couple of slides for us? Roy, I'm presuming you can't see the slides having moved either.
No, I can actually, Rebecca.
Oh,
no. They're not showing for you.
Okay, all right. I think it's a Teams bug. Don't worry, I've pressed some buttons. I'm sorry, that may have been my incompetence. So wholesale power prices. I said we'd look at where they've been. When we were here this time last year, we were sort of somewhere in the middle of that very busy spiky bit towards the right hand side of the picture. So it's important to say that this shows monthly average day ahead prices. Actual day-to-day variability would have been much higher than this throughout the period, but certainly was during 2022. What we can see on the far right hand side, obviously this has got quite a long x-axis on it, so we're looking way back into the distant past. So what we can see on the far right hand side is that more recent average monthly day ahead prices have fallen back very substantially, certainly compared to the excitement and the peaks of the energy crisis period. But what is also evident is that at the moment, at least, the prices remain a step above the long-term average price that you can see. In fact, it's been a pretty stable this particular dimension has been pretty stable throughout the entire period of this. But what you can see on the right hand side is that we've now got monthly average day ahead baseload prices more in the 80-ish plus pounds a megawatt hour rather than the long-term average, which was probably just above 50 pre-energy crisis. So that just gives us some context for the way that energy policy discussions have evolved this year. And I suppose one of the things to say from the outset is that although affordability of energy has continued to be a big part of the conversation for energy policymakers this year, it probably has not been such a dominating factor in energy policy conversations as it was during the energy crisis. You move on, please, Penny. Thank you. So it's very difficult. If we could accurately predict future power prices, we'd all be doing different jobs. I think it's possible that we said that last year, but just in terms of getting an idea about where analysts and those people that publish longer term forecasts are thinking about energy prices, most views that you see will expect wholesale power prices to, over time, return closer to that historical long-term average. But in the next few years, at least, most forecasts will see prices above the pre-crisis levels. So a continuation of where we are at the moment for at least the short term. But of course, these are predictions. Nobody will know, and we could be here in 12 months' time with a significantly different picture. There are a lot of factors that will influence whether or not that's the case. We've selected two of the published, publicly available views of prices. There are others you can find, but just by way of example, so Cornwall's Power Market Outlook, they've done a lot of work over the last couple of years, being the public forecaster of the energy price cap. I think self-nominated in that role, but they've done a lot of work and been widely quoted predicting the level of the price cap. And the blue line is from the Department of Energy Security and Net Zero and their energy and emissions projections. So those are the two sources that we picked. Others are available. We thought, moving on, we thought it would just be helpful to reflect on some of the factors that are driving energy prices in the medium and longer term. And given the diversity of our audience, I'm sure some of this is very familiar to some of you, but at a relatively high level, just in terms of explaining some of the things that we're looking at when we and Cornwall and the government are looking at when we are making our predictions of the future. In terms of pressures downwards on energy prices, electricity prices specifically, what we've certainly seen, we've seen the results of more recently, is the impact of the response across Europe to the energy crisis, specifically, or in particular, demand reduction, which was known as sobriety over most of the continent, which was a very big factor in reducing demand levels over last winter and into this year, and will continue to have an effect to some extent. And also high European gas storage levels, which is a combination of concerted effort by European countries to fill their gas storage, but also relatively mild weather. And for those of us in the UK over the last few days, it might not feel as though we've had relatively mild weather, but as a trend over the last year or so, the weather has been mild, which has allowed the gas storage to be filled relatively easily. As we look ahead, we can also anticipate, we've already seeing this, but even more periods of high renewables output, which will tend to depress electricity prices, all else being equal. Also increased interconnection between the UK and other networks across Europe, and maybe even further afield in time. And another important growing theme is the role of demand-side flexibility in responding to price signals and times of peak demand to reduce their demand, which will in turn tend to put downward pressure on prices. On the other hand, of course, the sources of gas supply into the market are likely to continue to be a particularly important driver. Natural gas prices will remain the key driver for electricity prices in the UK for the foreseeable future. So how well supplied the gas market is, and in particular, as mentioned here, whether or not gas is flowing from Russia, will have a big impact on the tightness in the gas market, and therefore the price of gas, and therefore in turn the price of electricity. And also other wider macroeconomic factors around interest rates, supply chain constraints. Against everything, we're still anticipating a strong trend towards electrification of heat and electrification of transport, which will increase demand for electricity and therefore put upward pressure on prices. So hopefully that's a sort of a useful backdrop to the factors that are relevant to the longer term direction of energy prices. Penny, could we move on, please? Thank you. You're ahead of me. Thank you. So last year, I remember we looked specifically or in a little bit more detail about what had been happening in the domestic supply market and then in the non-domestic supply market. So doing the same again here. This chart shows the level of the domestic default tariff cap, which currently around 80% of all households in the UK are on a tariff that's likely to be at the level of this default tariff cap. And this takes us from the start of 2023 to the latest published number, which will be for Q1 2024. And you can see on that picture that the domestic price cap has fallen very substantially. If we went further back in history, we'd be able to see that back in April, in the summer of 2021, pre-crisis, the price cap was around £1,200 for a typical household. So that step up in the underlying price cap to over £4,000 at the start of this year was obviously very steep indeed compared to £1,200 a couple of years earlier. We're now back, if we look at the latest published number for the first quarter of next year, we're at around close to £2,000 a year for a typical customer's gas and electricity bill combined. So whilst the fall has been very substantial, the reality is that's still much higher than it was in the summer of 2021. So for all me saying at the start that perhaps affordability has not been the major topic of conversation in energy policy that it was last year, it is still certainly a significant concern for us and for other suppliers in the industry. And you can see marked on this chart the level of the government's price guarantee, which meant that certainly for the first part of this year, domestic customers were insulated from some of the higher prices, with prices being capped at £2,500 a year. The impact of that guarantee has now fallen away. The guarantee is above the level of the price cap, and therefore customers are now paying the full cost of the electricity and gas bills. One thing we've really observed from Ofgem this year in the domestic market is quite how carefully they've been looking at what makes up this default tariff cap. So it is intended to be a reflection of the actual costs that an efficient supplier would bear supplying a domestic customer. So there's a very complicated model inside Ofgem where they have a line-by-line cost stack view of each element of the costs, and you can see in the chart here some of the categories split out. Ofgem's model is very much more detailed than this, as you would expect. What we've seen from Ofgem is pretty much a consultation a week on the price cap and the design of the price cap as they seek to refine and improve the sophistication behind lots and lots of those line items, including their view of the operating costs for suppliers, the energy costs that suppliers face, the debt costs that suppliers face, which has certainly it's certainly kept our teams busy, and I think it's kept Ofgem busy too. Time will tell whether or not this way of setting a regulated price is actually a sustainable and effective way of determining a price cap. Moving on to the business and public sector supply market. I'm sure a number of you are aware that the government support that was in place through the energy crisis has been replaced by something very much smaller with much more limited eligibility, the Energy Bills Discount Scheme, where eligible customers have had support on a unit price basis, but the impact of that has been far less and far less comprehensive deliberately than the scheme that was in place during the crisis. As has been the case for some time, businesses in sectors with high levels of energy use can be designated as a energy trade intensive industry. And this year there has been additional support available for businesses that have qualified, have met the requirements to be eligible for that support too. We've also as part of a long-running, in various forms, support for electricity intensive industries. There is a new name, the British Industry Supercharger Scheme, which is going to provide exemptions from, amongst other things, capacity market costs for those electricity intensive industries. The reality is that the costs that are not covered by the electricity intensive customers will then be borne in a very small way as a cost increase by all other customers. And this is always the challenge whenever a government scheme is introduced to exempt various types of customers from certain charges. The question is, where do those costs go, and where else in the system are they picked up? Another theme that we've definitely seen emerge, continue to grow this year, is around flexibility. So customer flexibilities, some of you as domestic customers may be involved in the winter demand flexibility scheme at home. Equivalent kinds of schemes exist for that non-domestic customers can access, and if anyone is interested in that, I know that's something that our teams will be able to talk to you more about. Certainly smart meter adoption or certainly half-hourly metering is a good start to your journey if you are interested in being more involved in demand-side flexibility as a business. Now, overall, certainly interesting for me with my sustainability role at EDF in the UK, we can see increasing interest from non-domestic customers and public sector, not surprisingly, for renewable or low carbon energy supplies. Some of you will be familiar with the REGO certificates, the Renewable Energy Guarantee of Origin certificates, which for some time have been a way for non-domestic customers to demonstrate a low carbon energy supply or renewable energy supply. This year we've seen record high prices for REGOs, which has been quite an interesting phenomenon. And then lastly from me, before I hand over to Roy, Ofgem has been pretty busy in the non-domestic space this year, which is not something we've necessarily seen to quite this extent in the past. So one of the themes that we have observed for 2023 is increasing interest, both from Ofgem, but also from politicians and from government departments around the way that the non-domestic energy supply market operates. I think in part triggered by the support schemes that were in place for non-domestic customers during the energy crisis. I think that piqued a level of interest and certainly increased the level of understanding within DESNZ and to some extent Ofgem, I expect, about some of the features and complexities of the non-domestic market, and that has meant that they've been more interested in gathering information about it and making a number of interventions or proposing a number of interventions in the way that the non-domestic energy market is regulated. So I'm not going to go through all of them in detail, but we grouped some of their activities into these three themes of pricing and contracts, where Ofgem's been specifically looking at the way that deemed contracts are priced and also the use of security deposits. And one of the things that they have done in this space is release various bits of guidance for energy suppliers, but also useful for customers to look at to understand what you should be expecting of your energy supplier. But also in a bit of a read across from the domestic supply market, Ofgem has been looking at the way that customer complaints and standards of conduct are implemented within the non-domestic market. So certainly an increased focus from Ofgem about the way that non-domestic energy suppliers manage complaints from their customers and the expectation that business customers should have of their suppliers when they raise complaints. And then thirdly, third-party intermediaries is not a new topic of discussion actually for energy policymakers and indeed in other sectors outside energy. the way that TPIs are overseen and regulated in the energy market continues to be a topic of discussion. So you can see that Ofgem this year has actually stepped forward to government to recommend that the TPI market should be brought under direct regulation. That's a conversation that's been going on for a little while. And with that, I'm going to hand over to Roy, who's going to perhaps talk about some of the challenges of 2023.
Yeah, thank you, Rebecca, and good morning, everyone. So yeah, I'm going to look at some of the sort of wider energy policy and net zero related developments over the past year. So as Rebecca mentioned, obviously in 2022, we saw extremely high gas prices at levels we'd never seen before. And that certainly sort of created a narrative that the key solution to this issue was to get ourselves off gas as fast as possible, to invest in low carbon generation. That was the best option for energy security, for more stable energy prices, and for decarbonisation as well. I think that, that's still very much our overall view and definitely aligns with EDF's positions. But I guess what we've seen in 2023 is some of the challenges of moving in this direction have come to light and been brought more into focus. So this slide looks at two of those. Firstly, networks, and then some of the cost impacts of the sort of inflationary environment we found ourselves in over the past year or two. So on the network side, you may well have heard the new Energy Secretary of State talking about networks and how her issues are all grid, and that reflects, I guess, particularly a couple of big issues that have come into focus this year. Firstly, a huge connection queue. That's projects seeking a connection to the network. The figures are enormous. Around about 500 gigawatts worth of projects have applied for connection queue. And many of those are receiving offers that are many years ahead, running into the 2030s. And that has created a lot of discussion around, how many of these projects are real? Are they really able to deliver? And do we need to reform the way that the connection process works? And so what we've seen over the year is that the electricity system operator has come up with some proposals, and those have recently been approved by Ofgem and the government in a connections action plan that was published alongside the autumn statement. And in essence, the key change is the connection queue used to work or has worked on the basis of a first come, first serve principle. So if you apply, you get a place, you're the next in line. But moving now, we will now move to something that's much more based on whether projects are indeed ready to connect. Have they got the planning permissions? Are they ready to invest and build out? And hopefully that will address some of the backlog of collections for projects that are able to deliver. At the same time, I think the other focus of networks has been just a recognition that we need a lot more network to connect all of the low carbon generation, particularly wind and offshore wind, that will be needed to achieve our energy policy networks, our energy policy objectives. And that will require much more of a sort of strategic plan of where we need our network and an accelerated delivery of that relative to the pace that new network infrastructure has been built over the past few decades. So we've seen a report by the Electricity Networks Commissioner, Nick Windsor, which has made a whole series of recommendations about accelerating the process for delivering new transmission network infrastructure. And again, recently the government responded to that, essentially accepting all of those recommendations. So I think that will be a continuing focus in the coming years about how we can most rapidly deliver networks to support energy objectives. Yeah, and alongside that, the other big challenge has been on the cost side. So, we've all been conscious in our personal lives of the impact of inflation, and the energy sector has been by no means been immune to that. We've had a lot of inflation in supply chains, and that has impacted the costs of all forms of new low carbon generation projects, and to such an extent that after perhaps more than a decade of big cost reductions, particularly in renewable generation, for the first time, we've actually seen that come to a halt, and some of the costs of new projects start to rise, driven in particular by that supply chain inflation, but also much higher interest rates, which impact on the cost of capital, the financing cost for new projects. I guess the most visible feature of this change has been that in the most recent Contract for Difference auction rounds, there are now annual auctions for new contracts. I'm sure many of you will have seen that there were no offshore wind bids. Effectively, the offshore wind industry concluded it couldn't deliver against the benchmark price that the government had set for that auction. That's obviously been a setback this year, but certainly in EDF we still think that the Contract for Difference scheme is the right one, and it will deliver the best approach for investing in renewables and balancing costs for consumers. And the government has already brought forward some proposed changes for next year's auction, which we very much welcome. So we hope that this is a temporary blip rather than a permanent challenge to plans. Okay, next slide, Penny. And I guess, the other obviously notable development I think this year has been that the overall debate around net zero has become more political. Perhaps, obviously most notably with Prime Minister Sunak's speech and announcements in September of this year. And I think the media reporting of those has been quite polarized, as shown on the various pictures on this slide, with different perspectives on what it means. I think perhaps a couple of observations from us. I guess the first point is as we decarbonize more and more, we enter more into the daily lives of people and the choices they make around how they heat their homes and the cars they buy, and that I think inevitably makes the net zero agenda more political. That's perhaps a development that we were always going to face, and with all the cost and affordability challenges that we face at the moment, it's perhaps not surprising that many people feel that electric vehicles and heat pumps are difficult financial options for them. And that's certainly something that we feel government policy will need to continue to address. At the same time, I think it's perhaps important to stress that what's changed in net zero policy is perhaps can be overstated. The biggest sort of focus of Prime Minister Sunak's announcement was around the change in the target date for the phase out of petrol and diesel cars, putting that back to 2030, which was indeed a change. But only a few weeks later, the government also announced its targets under a new regulation called the Zero Emission Vehicle Mandate, and that will require 80% of new cars to be zero emission and thus effectively electric by 2030. So that big transition is still underway. At the same time, there's also policies to support the heat pump market. The grant has been increased, and we've seen a big growth and uptake in that area over the last few months, which is very welcome. And more generally, obviously, all the moves to decarbonize power, to address the network issues that I discussed in the previous slide and so on, are continuing. So that although there has been something of a shift in the presentation, I think many of the key policies are still in place. Okay, Penny, next slide. And behind all of those kind of challenges and headlines, I think it's also important to say that lots of good progress is being made in many areas in the energy transition. Obviously, in EDF, we're working very hard on the construction Hinkley Point C. I think anyone who's been to that site or watched our videos will know that there's an enormous effort going on there to deliver that project. At the same time, we're also working on our follow-on project, Sizewell C in Suffolk. I'm very pleased with the progress on that project this year. We've seen the government take an investment stake in the project. The process for inviting investors to come on board is underway, and a lot of all the nitty-gritty details of the financial model for that project are being now very progressed in great detail. So a lot of good progress there as well. In the wider market, as just highlighted a few, I think, notable developments. So a grid scale battery storage is really a flourishing area. Perhaps a few years ago, there was virtually none in the GB electricity system, but today we have over 4 gigawatts either in operation or under construction, and that's a key technology for managing intermittency in the electricity system and some of the wider impacts on the power network from more renewable generation. So very positive developments in that market, which is continuing to grow. Rooftop solar PV has also experienced a boom, obviously driven very much by high electricity prices, which have made the investment case so much better. And we're expecting, I think we don't have the final figures yet, but it looks like it'll be a record year for domestic and commercial installations in that sector. And also on the EV charge point side, I think many people will probably read in the papers that there's not enough charge points in the UK, and that's holding back sales of electric vehicles. So we obviously need to do more in that area, but I think it's worth flagging that there's been a real boom in the volume of public charge point installations this year, up 45% year on year. And perhaps some of you may have started to notice that when you're visiting motorway service stations and so on, but there is a big growth now underway in that sector to try and match the expected growth in the EV fleet. Okay, and then looking finally on energy efficiency. So this is a really important area for net zero. It's absolutely essential, I think, to making the transition cost effective for homes and for businesses is to improve our energy efficiency of the UK building stock. And it's a mixed picture on this one overall. There are some positive developments, but overall, I think in EDF, we still feel this is an area which needs a lot more progress to maximize the benefits that we can get as a nation from energy efficiency. The first few points on this slide relate to the domestic market. We have a eco scheme that's been running for many years. We're now in Eco 4, in the second year of delivery of that. We're making good progress in EDF on that, but it's a complicated scheme with quite detailed eligibility criteria and delivery challenges. We would like to see that simplified to make the delivery process easier. At the same time, there's also a new scheme called the Great British Insulation Scheme, which extends eligibility and support for energy efficiency measures to a greater number of households. The focus of Eco 4 is very much on fuel poor and vulnerable households. But the Great British Insulation Scheme is itself quite limited in scale relative to the number of homes that we would want to upgrade as a nation. We're expecting some important consultations in the near future. One is on the Future Homes Standard. That's essentially the building regulations that will apply for new developments. And the key expected change in this area is that from 2025, we're expecting the government to require that all new homes will be zero emission at the point of use, as it were, effectively not allowing new gas boilers and requiring new homes to be electrically heated. So that's something to look out for. We're also expecting some reform of EPCs. Particularly, we hope to see that more credit given for electric heating and for heat pumps than the current system delivers. On the industry and public sector side of things, we're mentioning here a couple of the key schemes that some of you may be able to access for support. On the business side, this Industrial Energy Transformation Fund is quite a long-running and well-established scheme now, provides support for both energy efficiency and low-carbon measures in industry. The latest funding is a further 185 million. And there's also another quite well-established and very effective scheme for public sector organisations called the Public Sector Decarbonisation Scheme that's run by Salix Finance. I think the most recent funding round has recently closed, but I think we're certainly confident that that scheme will continue to operate. So if you're in the public sector, look out for that one. And of course, EDF, we are always very happy to help our customers in terms of energy efficiency and low carbon solutions. Our offerings and services in this area are now pretty much all branded under the Dalkia name. So do get in touch with Dalkia if you'd like advice or support in that area. We've also recently acquired a solar PV technology installation company, SAS Energy, so we're expanding our offering in that area. Okay, I think with this slide, I will hand back to Rebecca.
Thanks, Roy. So this is crystal ball time, but actually looking at this list, I mean, I will be pretty disappointed if we get to the end of 2024 and we haven't had progress on this list of areas at least. Firstly, and fairly briefly given time, but firstly, the government is in the midst of discussion about the future electricity market arrangements, which I am pretty sure we would have mentioned in last year's session as well. So that is a mammoth piece of work, looking at whether or not our market arrangements are fit for a net zero electricity system in future, and if not, what and how do we need to evolve it. We've been working hard with the government and with other industry participants through the whole of 2023 on this project, probably a little bit behind the scenes. The government is certainly expecting to bring forward its next round of consultation on REMA next year. Policy cost rebalancing, linked to some of the points that Roy's been discussing. We are still in the situation where in the UK we have very high, a very large ratio of electricity prices to gas prices, by which I mean that our gas prices are very low relative to the height of our electricity prices compared to other markets, other countries. This is partly, not entirely, partly because of policy costs that are in general levied on electricity bills rather than on gas bills, which exacerbates the underlying difference in price. And it tends to mean that if you were to decarbonise your heating and move to an electric heating source, for example, the operating costs of running electric heating could be much higher than running gas heating, and therefore it's a disincentive to electrification and therefore to decarbonisation. So it's a long-running policy discussion, and we are hopeful that we will next year see some movements in this space. UK carbon price. So if anyone's been following carbon pricing carefully, you'll know that whereas historically UK carbon prices were perhaps a little bit above European carbon prices, for most of this year, if not all, the situation has been entirely reversed, and carbon prices in the UK have been very much lower than carbon prices in the EU, and this leads to all sorts of potential complications around carbon border adjustment mechanisms, but also is not helpful in terms of driving decarbonisation within UK industry in particular. So we expect there will be some developments in that space about the future of UK carbon pricing. And then also just mentioned a couple of slightly more less mainstream but increasingly important discussions that are very much linked. So low carbon hydrogen as a potential alternative route to decarbonising heat and industrial processes is a growing area, and we expect announcements in this space from the government very soon. And as part of that, of course, we will need to, as a country, have a discussion about what the future of the existing very extensive gas grid that we have is. And then very much finally, general election at some point, no later than January 2025. If anyone has any views or best guesses, feel free to put them in the Q&A, and we'll see who maybe is closest to being right when we get to this time next year. The main point, I suppose, to make here is that actually, whilst of course in an election campaign anything can happen in terms of energy becoming politicised and potentially becoming a point of significant difference between the main parties, as it stands today, actually we would say that the Conservative and the Labour Party are very largely in the same general direction of being agreed on the need for decarbonisation, prioritisation of net zero, and their support for low carbon generation, including nuclear and renewables. And therefore, as it stands today, we're not expecting positions on decarbonisation to be a significant point of differentiation, but of course we may yet be proved wrong. I think we will stop there. If anyone has any questions, I realise we've pretty much run right up to the end of the scheduled slot. But if anyone has any questions they'd like to ask, please do.